Hello, and welcome to the AgCulture Podcast, where we share insights about the future of agriculture. Each week, we dive into the stories, technology, and ideas shaping a sustainable and profitable future for farms and rural communities alike. I'm Paul Windemuller, host of the AgCulture Podcast, and on today's episode, we have Matthew Pryor. Matthew is a serial entrepreneur and pioneer in agriculture technology, with an extensive experience in both Australia and in the United States. Matthew is the co-founder and managing partner of Tenacious Ventures, an investment firm focused on supporting early-stage companies in Agtech. In my conversation with Matthew today, you're going to hear about the differences between Agtech company startups in Australia and the US, and also some of the tidbits of advice that he has for entrepreneurs looking at starting an ag tech company, and also the pitfalls for them to watch out for. I think you're going to find this a really interesting episode, whether you're an ag tech founder or a farmer as well. So without further ado, here's today's episode with Matthew Pryor. Hey everyone, before we get started with today's episode, I just wanted to take a second to thank our sponsors, Bank Barn. I love these guys and what they're doing to streamline banking and agriculture. They're helping to connect farmers and lenders so that today's farmers have more options no matter the size of operation. Check out bankbarn.io to learn more. Well, today we have Matthew Pryor from Tenacious Ventures with us here today to talk all about ag tech. And you are coming to us from Australia today, correct?
Yeah, that's right. Hey, Paul. Yeah, great to be here. Thanks for the opportunity. Coming this morning, well, for me this morning from Sydney, Australia.
Yeah, I'm looking forward to our conversation. You have a wealth of knowledge and experience in the ag tech world, both in the U.S. and Australia. Originally from Australia, I'm guessing, with the accent.
Yeah, that's right. That's right. Yeah, absolutely. Yeah. Although my R's are, some of my vowels and consonants are a bit weird because I lived in San Francisco for 7 years and had to adapt a little bit.
Got it. So you have a little bit of California influence.
That is correct.
In your talk, but you're definitely still an Aussie at heart.
100%.
Well, great. Well, why don't you start out by giving us a little bit of background, first of all, on your career, what kind of led you to where you're at today? And then a little bit about what you're doing with Tenacious Ventures as well.
Yeah, I wrote a short story once that the title of which was I Rode into AgTech on a Broom. And like the reason for telling that story is, so I grew up in a large country town. My father was a surgeon. My mum, I come from a large family. I'm one of 10 kids. So my mum's full-time job was looking after us. But we did have some farmland that was family farmland. And so most weekends, weekdays, we were out there largely sheep and cattle, but sheep shearing like in summer in Australia. So over kind of December, January, it's real hot and you're in a tin shed and,
build some character there.
Correct. So, did some hard yards in those early days. But actually, like the very first time I got paid for work on a family farm, which I know is unusual, right? It's normally a family application. I took my check and actually bought a kit computer, and this was real early in the days of PCs, and I just got lost in the world of PCs. So my early career was very much in tech. Studied computer science, started a software company straight out of college with a bunch of college buddies. Ended up living and working in Silicon Valley, well, in San Francisco, which, back then was kind of almost part of Silicon Valley. But a great experience, kind of saw venture capital, saw the .com boom and bust. But it was a fascinating experience. And that kind of, I guess, set me up to sort of understand the important role of capital in helping new ideas get off the ground. I moved back to Australia with a young family, like a lot of expat kind of people do. And a research project dropped in my lap that was kind of looking at the use of technology in managing water in agriculture. And I just, I ended up on these big cattle ranches out in the north and west of Australia, where they're like as large as small European countries, and there was just no technology anywhere. And it blew my mind, having come literally from the kind of heart of tech in Silicon Valley to this beautiful landscape of kind of the Australian outback, but technology just had barely touched ag, and it just felt like an enormous opportunity, and that's where I've been, since that time in kind of 2004.
Okay, and what was the kickoff to Tenacious Ventures?
Yeah, so that kind of journey actually ended up being a company called Observant, and 15 years really into what would become the Agtech market. Our focus was on-farm sensors and automation and control for irrigated agriculture. I'm sure your listeners know enough about Australia to know that, water has always been a precious commodity here. And a lot of Australian agriculture has been about managing, resources carefully. We've got pretty thin soils in a lot of the country and not a lot of water, and so there's always been a culture of investing in innovation and trying to make our farmers more efficient through development of R&D and innovation. That company expanded a lot in Australia, and then actually ended up back in California in the other valley, in the Central Valley. And this was a time when, water allocations in irrigated ag were starting to become questionable, when there was becoming an awareness that managing water, managing nitrogen, were going to be things that needed digital kind of rails and additional kind of support. And that was kind of 2016, 17. So there was a lot happening. The Silicon Valley and Central Valley were kind of coming together a bit, and there was a lot of investing going on. That company got acquired by a multinational, and I got to see the state of ag tech across a range of different countries. And it just felt to me like Australia had knowledge that the rest of the world could use. And so after a couple of years post-acquisition, I started thinking about how could that be advanced? How can we get more of this knowledge outside the country? I got a chance to co-found an accelerator program, and I really enjoyed working with other founders. And then I met Sarah, who's my co-founder in Tenacious. She grew up in Silicon Valley, almost the opposite story to me. Grew up in Silicon Valley, came out to Australia. She had been working in this area as well. We kind of talked a bunch and realized that we kind of saw the same thing. And after trying a bunch of different ways to help startups be investment ready, or to help investors understand how to look for good startups, we just thought, well, hang it. Like, someone here has to create a dedicated venture capital fund for Australian originated or, strategic to Australia kind of ag and food tech. And so that's what Tenacious is.
Okay, that makes sense. So what stage is early stage in your opinion? Is it we're just at an idea, we're hoping we can do this, we can make this idea take shape and actually start a business from this? Or is this to the point where they're looking at getting some serious seed capital and really ramping up the technology? They have maybe a base outline of what their technology is. They need help putting the large scale business structure together and the funding to scale it.
Yeah, it can be both. So we have two funds. Our first fund was 35 million Australian. We invested in 14 companies out of that fund, and we're continuing to follow on that, investing in those companies, but no new companies going to that fund. We have a second fund now that we've just hit our first close on, so that's 20 million on its way to 50. And we've learned things between those two. One of the things that we've learned is the answer to your question is never like just one answer. A little bit past just idea, but for example, someone who might have been working in an area where they really understand the problem, and then somehow a technology kind of came across their desk that maybe they didn't invent, but they're like, wow, I could take that over here, right? So that would be an example of, where we could get to conviction about investing in an early start. That sometimes it's a lot more complete. The founding team originated the technology and, have got it a fair way. There's no hard and fast rule. There doesn't have to be revenue. There doesn't have to be a product that's ready to go. There does have to be an insight right? About like, what is the real problem here? Is this a problem that real people actually have and will pay money to have fixed? And sometimes in ag also, that isn't necessarily the same person, right? The farmer often has to be the person using the technology, but sometimes the kind of benefit of the use of that technology accrues to someone else. And that's where business models come into it. So another answer to that question is we pay a lot of attention to business models as well as technology.
Yeah, and as your fund, how much of that, how much of a portion of your time is dedicated to teaching these companies those type of things, and how much is dedicated toward the business expansion side?
Yeah, great question. I love what you're doing, and podcasts are a great way to engage people in conversations and a great way to help learn and educate. So we also have a podcast called AgTech So What, and one of its primary purposes is to do exactly this, right? To have conversations with people. Sometimes those will be founders or people who might become founders. Sometimes they will be deep domain experts in one area, people who have had a bunch of experience. So sometimes it's direct, and we do work closely with our founding teams. Sometimes might be their first company. The team might be small. And so, a lot of our work is pretty hands-on. Sometimes we want to kind of put stuff out there. So when people are thinking about what they might do, if we can help them think in a particular way, or if we can help them avoid a pitfall that we've observed, then we want that to happen as well. So some of it direct, some of it indirect.
Okay, that's great. What would you define as ag tech? I know sometimes we think of really pie in the sky ideas with super high tech, lots of computers, bells and whistles, sensors. But is ag tech always have to be that, or is it sometimes a really simple? Do you have an example where it might be something very simple?
Yeah. So I think you're right. Our experience is that people often think it is something in particular, and they think it's like a really cool widget that's getting used on a farm, for example. But it is possible that it can be much simpler. Technology can have a real impact, but it doesn't have to be that the technology is right there in front of you, right? So, a good example would be the direction that AI is going. One of the benefits of some of that generative technology is actually making computers much easier to use for people, right?
Yep.
If you're sitting in a cab of a tractor or a harvester or something like that, like the last thing you want to have to be doing is complicated stuff with a monitor screen or whatever. And if you can just sit there with a headset on and talk, right, ask a question, get an answer. So I think, it's useful to separate between like what's the underlying innovation versus how do people get exposed to it. I think that's one of the areas that we're really excited by with some of where AI is going is like it's another way to say it is like as a rule, humans and computers haven't got along very well, right? Like we invent all this stuff and screens and graphs and, complicated user interfaces, but largely because computers and humans just like thought differently about stuff. We love to talk. We like reading, written communication, verbal communication is pretty fundamentally human. And so if computers can get a whole lot better at that and have us sitting in front of a whole lot less screens, I think a bunch of people would be happy with that. And it doesn't mean that there's not sophisticated stuff taking place. It doesn't mean that there's not satellites and, all sorts of things working out what the answer should be, but the answer can be simple. So I think that that's something that we're excited by, is when people are thinking about the difference between what the tech is versus how do you deliver impact from the tech. And it's not necessarily by putting something complicated in front of people who prefer a simple button.
And I guess along those lines, what are some of the ways that you've seen for successful collaboration to make sure that does happen between farmers and ag tech startup founders and everyone in between?
Yeah. It definitely goes to, when we're making an investment. So back to your previous question about like, what we're looking for, founders who have a really strong understanding of what will get, what we call like product market fit. And, sometimes that's obviously got to do with the technology. It's generally got a lot more to do with how much time the team has spent understanding their customer, right? Understanding the problem and really forming a view and testing that view. Like, is this actually the way that people want to take delivery of the solution, right? Is this going to work in with the way they're going to want to work? Because the hardest thing to do in AgTech is change behavior, right? Like, people generally like the way they currently do stuff, and people generally, are comfortable with what they've currently got. And maybe the counter example is sometimes these solutions ask people to change too many things at the same time, and that's more often the reason they fail than whether the technology itself.
Yeah, I've definitely seen that firsthand.
Yeah.
You're trying to do too much too quick.
Yeah. I mean, that's right. Human behavior, like, it's just really fundamental, right? We talk about the relationships with farmers and the people whose advice they already trust, the ways. So I would say understanding that, farming is largely about managing risk, right?
Mm-hmm.
And good founders really understand when they're asking farmers or trusted advisors to kind of shift a risk parameter in a way that feels uncomfortable or in a way that is unquantified. It's like,
yeah,
I know this works. You're asking me to do it a different way. And is that a 10% risk of failure or a 90% risk of failure? Like, if you can't help me calibrate there, it's not going to get done.
I want to touch base a little bit more on your past experiences. I've had an AgTech founder on here who is from the UK, talking about some pretty big differences between AgTech in the UK and AgTech in the US. So I would like to hear your perspective, being in both Silicon Valley and California in the US and being in Australia. What are some of the dynamic differences and how things get done, and what should founders that are AgTech founders keep in mind, depending on where they want to be?
Yeah, it's something we think about a lot, actually, because obviously we're investing in companies that normally are not US based. Sometimes they are, but normally they're not. And yet, typically, their bigger markets are going to be North America, USA, Canada, for sure. And so, deciding when to go to North America, deciding how to go to North America, always consideration. My personal background, like I said before, I went twice. First time was in the tech world, and the second time was more the emerging ag tech. One of the things that I think people don't appreciate as much is, largely Brits, Kiwis, Aussies, we grew up in American culture, right? We watched American TV shows, and so when we go to the US, it feels familiar. I think the mistake that people make is the same is not true the other way, right? Like you said before, when I go to the US, I'm just some guy with a weird accent, right? And things like humor and irony and how people make decisions and who they listen to, these are cultural things that actually are a lot different between Australian culture, British culture, US culture, even states probably across the US, right? And I think that it is a risk that founders face when they come into the US, thinking it's just like, 50 homogenous kind of states, and secondarily that you can get fooled into thinking that people understand you as well as you understand them. And that asymmetry I have seen, has tripped me up, has tripped up other founders, thinking that you're leaving a room where your message has been delivered, thinking that you can just walk into a room and start doing business with somebody the day after. So I think there's some important lessons there, certainly. I mean, ag is significantly similar, right? Like scale of machinery, kinds of machinery. Okay, there's a whole lot less corn and soy in Australia, but broadacre agriculture roughly works the same way. It's roughly the same companies as manufacturers of farm inputs, as manufacturers of farm equipment. So there's a lot that's similar, but the things that are different in important ways that are pretty critical to understand if what you're thinking about doing is heading to the US to do business.
And some of those differences, like capital raising, right? I mean, that's the business that you're really in for startups, is probably very different in dollar amounts and access than in Australia than it is in the US. So how does that play into growth of a startup?
Yeah. I mean, for sure, amount of capital available is smaller. I mean, even in terms of proportion of population, venture in the US is just larger, both in total volume as well as kind of per capita basis. Like we have copied Australia has copied a lot of the kind of venture templates in terms of how funds work and how they invest and what we look for. So, some things are similar. Valuations is an area that vary a lot. Generally, Australian companies who might have raised at seed would go to the US, and that would be a pre-seed raise, like just the numerical amounts, not even including exchange rates, which also another factor. So it is an area where, again, founders can kind of fall into a trap of thinking that it's more similar than it is. The way that you get connected to VCs in the US. I mean, Australia, in the end, it's a smallish country, right? Like less than 30 million people. Many of them, down the eastern seaboard and on the western coast, and sparsely, throughout the middle of the country. So you don't have to be many degrees separated from anybody really to kind of first person, second person connect at a VC level. So like there are opportunities too, though, right? I mean, if moving across to the US, creates opportunities for companies really to represent a good investment opportunity. I mean, in relative terms, companies that are ready to go to the US have raised, a small amount in US terms, are still kind of pretty affordable in a US investment, but probably have a well-hardened product that has been shown to work in production environments that are very similar to production environments in the US and Canada. So it can also turn into a kind of strength if it's used the right way.
What are some of the examples that you have from Tenacious Ventures of some companies that started out with you and have grown beyond maybe where you're at today?
Yeah, I mean, probably the one that springs to mind most readily is Swarm Farm Robotics. They're, a pretty mature now autonomous vehicle platform company, originated in Australia. Actually, a husband and wife farming team just got frustrated with heavy equipment and kind of large conventional equipment, large conventional dealer kind of approach. And over the last, significant period of time have created, a new platform technology for on-farm autonomy. In Australia, they manage millions of acres of autonomous land, and they're really now just starting to expand into the US, and are able to go there with equipment that, is truly fully autonomous, has thousands, tens of thousands of machine hours, millions of acres kind of covered. And so it's a pretty different prospect to kind of go there and be able to talk to growers and advisors to growers and kind of say, well, look, there's over 100 of these machines being fully owned and operated by farmers in Australia doing, see and spray kind of weed management across a range of broadacre crops, all very familiar, and really differentiates a company from early stage, put it together in the garage and are starting to kind of roll it out on farm, but still in kind of R&D phase. So I think that's a good example of that ability to move to North America from a position of strength, like really solid product, very significant track record, customers who have not just bought one but bought multiple machines because they're so happy with the job that the product is doing.
Do you have an example of a company that looked like they had a really good, solid foundation under them in Australia that tried to go to the U.S. and really expand out, raise a lot of capital, and didn't really make it? You don't have to give names, but have you seen any examples like that? And maybe what are some of the lessons that could be learned from those type of companies?
Yeah, I mean, there are a number. I mean, I would say maybe you could say sort of first wave Agtech, especially ones that had a lot of on-farm equipment. I mean, Observant even to some extent, as we were expanding into the US, we completely underestimated how expensive it was going to be to put boots on the ground in the US. Just needing presence. I mean, to the conversation before about like confidence, and I would go and meet big almond guys in California, and they're like, well, who are you? Like, where in California is your headquarters? Who am I going to get service and equipment from? And it took us a good while to realize that we really had to work in collaboration with kind of local distributors, local retailers, local trusted advisors, and even within high value crops, like California itself is very large, right? And you're going from the kind of cropping systems in the south to kind of high value wine grapes in the north. One guy in a truck isn't gonna do it. And so I think one of the things that people get wrong is just assuming they can kind of land there, and because their product is so good, people will just start using it. Really underestimating the role of local support, of trust, and just like needing to borrow credibility from someone who's already there, someone that they already trust, rather than just like, I mean, in the end, Australia it's a long way away. It's a long way away from the US. Most people in the US, like the idea of flying 14 hours in an airplane just doesn't really compute. And so it's hard to borrow credibility from Australian farmers in the US.
What advice do you have for any startup founders that are looking to raise capital, whether that be in Australia or in the US or somewhere else in the world? What are some of the things they really need to be focused on at that early stage in your mind?
Yeah. I would say, I mean, the advice is for now is kind of different. It is a tight capital market, and it's tough fundraising. I mean, we've been out fundraising for our own fund, and that was hard. So I think the first thing to understand is that fundraising is selling, right? And when people teach other people how to sell well, the first thing they have to understand is who is the profile of your customer. What is the problem in their mind that you're talking about solving? And if you can't articulate that with respect to those investors, then you've got work to do, because you have to be able to talk to them in regards to how is an investment in your company going to solve a problem for them? How is it going to deliver returns for their fund? How is it going to give them exposure to an opportunity that's unique? How is it going to deliver impact if that's also within their mandate? So I think that's the first, is like treat it like sales, know the profile of the customer, and make sure that your communications are tailored to that customer profile. I would say the second is understanding that, as in with filmmaking, a lot of the craft of getting investment is suspending investors' disbelief, right? They're like, that your product will work, that the market will accept your solution, that farmers will adapt their way of working to take advantage of the product. And sort of like really understanding the things that they're going to struggle the most to believe and making sure that you're giving them evidence to say, you will know more clearly that it exists because this will be true in 3 months and this will be true in 6 months and this will be true in 9 months. And so, sort of addressing the fact that they're otherwise going to say, well, I don't know if these guys are going to make it, or I don't know if if they can sell the product well enough, or I don't know if sometimes there's technical risk, like literally that the product might work, but it currently only goes a mile an hour, right? And no farmer's going to take it unless it can do 10 miles an hour. So how do we show it's going to do 2 miles an hour by this time and going to do 5 miles an hour by this time? Things like that. Like, where will their attention rest? What will they struggle to believe? What data points can you put forward now and put forward later to keep addressing that kind of disbelief?
Or sorry, is there any advice that you could give on the business side for startup founders, how they should proceed, or some pitfalls to watch out for?
Yeah, we touched on this a little before, and I think so part of it goes to that disbelief problem. We have a phrase we use here, which is the difference between awareness and comparison. And what we mean by that is to say, sometimes founders will put a product in front of someone and that person will say, oh, that's great, right? And they'll start using it. What they haven't done is kind of work out whether that person actually knows what they're looking at, right? And so sometimes when a market is evolving, there's not a lot of awareness of what the solutions are. And so the first solution that comes along, a person might say, oh, great, I've got that problem. But in an early market, probably there are lots of people out there solving the problem, but because the market's nascent, it's hard to have awareness, as opposed to when things start to mature, like then you get to the basis of, I know what to look for and I know how to compare one solution to another. And so it's super important to know which of those two, because you can get, what you might say is false product market fit. It's like, I talked to 10 people and they all said yes. It's like, well, that's true. But if you went to a kind of different part of the market or a different part of the world, those 10 people might say, oh, but do you do this and that and this 3 things? And you're like, wow, so one of them is that, which is understand where you are in the market, because obviously from a growth point of view and a revenue growth, that often is the reason why sometimes companies stall out, right? They get a bit of early revenue because they're talking really to people who aren't sophisticated buyers. And eventually the market matures enough and actually their product doesn't compare well anymore because they were just largely dealing with people. So that's an important one from the business point of view. I would say the second also we touched on before, which is the difference between the user and the beneficiary, right? As a rule, farmers don't like subscription software, not because the software is no good or anything like that, but it's just like a constant high fixed cost is a constant high fixed cost. But if the farmer using the product means that their agronomist can do a better job or could recommend a different product or can recommend maybe a more expensive product, but actually drives yield higher, then that's telling you something about your business model. How can I get it such that the farmer can adopt the technology, but it's the relationship between the agronomist and the farmer that really benefits in a business sense from the way the product works. So understanding that and designing a business model that can capture value is a pretty important thing.
Yeah, those are very great insights that I think everyone should definitely take to heart if they're going down that road. So thank you for sharing those.
we have I think in terms of like frameworks. Imagine like a stair step with 3 stairs in it. There's what you might call value identification. Technology is very good at that. Hey, you're using too much water, or not enough water, too much N, not enough N. So tech can really make it easier to see stuff that maybe was hard to see before, identifying an opportunity. The second step would be what you might call value creation. And that tends more to be a market thing, right? Too much N means you get runoff, and maybe farmers start to get penalized, or their right to use the land has some permitting requirement. And so I need to use less N, or just the right amount of N, so I don't get runoff, so I don't get nitrification challenges in the water table or stuff like that. So those tend to be like more macroeconomic. Value capture is the part that's business, right? We've identified it, we've created it by saying, hey, we can tell you exactly how much N. The capture part is, okay, but who's going to pay me for that, right? And an example there might be, well, we created a nitrogen offset, and we sold the nitrogen offsets to the food company who takes the product from the farm. And they're the one who wants to make sure that, there's no ecological harm being caused by overuse of nitrogen. And so they kind of pay. That's just a made up example, but to sort of show that difference, a lot of the time people get stuck at the first one. Oh, there's this great sensor and it can tell you this thing. And you just like stick it on the farm, and it's like, well, no one really wants to pay for it. No one really wants to put another sensor on their farm. They certainly don't want to pay, a $50 a hectare a year, to sort of use and own it. So I think those in terms of business, in terms of like for you to create a company that's profitable and scalable, those are very important considerations.
Yeah, that's something that especially the more technical side of the founders don't usually take to heart until they are confronted with that situation, right?
100%. Yeah, and it is a common pitfall. And it's just as important to farmers, right? Like we have another saying, which is the food revolution will not be subsidized, right? The reality is that things have to be productivity-led first, and the other benefits of ecological sustainability and lower emissions have to be pulled along with profitability, productivity, yield improvements, right? And so that design of a business model has to take these things into consideration, right? That you're talking about people who their entire life is about managing risk and, managing their valuable asset that's been in their family likely for a long time. And if they don't have profit, they don't have, an enterprise. And so, these things have to be frontmost in design of any business model.
Well, Matthew, I really appreciate you sharing your insights today in the ag tech world from multiple continents. Having that background is very valuable. And how can people find out more about what you're doing with Tenacious Ventures, and if they're interested in coming along for the ride or hearing more about the individual companies that you're working with?
Yeah, awesome. I mean, where we try and get a lot of stuff out there. So Tenacious Ventures is the website. The AgTech So What podcast would be another way to kind of keep in touch with what we're doing. And then, if there are founders who are interested in investment, a lot do actually just come in through the front door. There's a form on the website, or LinkedIn is also a good way to kind of make an initial intro. And we're always up for a chat.
Awesome. Well, thanks again, Matthew, for being here on the AgCulture Podcast today. It's a great conversation, and I look forward to potentially meeting you someday in person.
Yeah, awesome. Good stuff, Paul. Thanks for having me on. I really enjoyed it.
Hey, and thanks for listening once again to the AgCulture Podcast. It was great to share this story and insights from Matthew Pryor and Tenacious Ventures. Check out his information in the show notes. Reach out to him, connect with him. I really love to see when guests and listeners can connect and have some synergies and some collaboration. That's really cool to hear those stories when I get a chance to hear those come back to me. So that's one of the reasons we did this podcast, is to be able to help expand everybody's network and stimulate new ideas, more discussion, and help others learn. So if you could help us with that by giving a rating and review, and also sharing with somebody that you know this episode, I would really appreciate it. And again, thanks for tuning in. We will see you next week for another exciting episode of the AgCulture Podcast.